Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
Glad to hear it. You're up bright and early over there. How is the world in Canada land?
Covered in very deep snow here in Toronto. We got very close to an all-time record snowfall. So it's about 40 centimeters. Fortunately, it was pretty light and fluffy, so not too difficult to shovel. But it's going to be a little bit warm today, but for the next 2 weeks, it's actually going to be quite cold. So the snow is actually not going to go anywhere. So we'll see. Our city's pretty good about plowing because we get 2 to 3 inches from time to time, but the big massive dump not so good. So we're not really good at handling large volumes of snow that stick around all winter, like in Canadian cities that are perhaps further north. So so we'll see what happens.
Okay, so I'm gonna pull out this snow fact given to me by someone last week, which was which I, having come back from Finland, I kind of can confirm is true. So snow, the colder it gets, the crunchier the snow sounds when you walk on it. Not a brilliant fact, but for me, as who sees snow every 10 years in the UK, that's quite exciting.
And when you get to minus 15 or minus 20, it actually starts to squeak. That's when it's getting down to minus 15 or minus 20. So
yes, that's true. We when we were in Finland, when we were walking on the snow, it felt like we were walking on halloumi cheese.
Yeah.
That's what it sounded like. It's really good.
Yep.
I better get away from this before I start dropping in how many words for snow Eskimos have, because I don't know. Right, we finished we did the last session last week, which was sort of a little bit of slap on the back for ourselves, going, hey, we kind of called 2021 really well and made some statements about 2022. Did you get any feedback from that, or have you been reconsidering what you said?
Oh, no, 100%. And, again, I, always take the chance when I do a forecast is to make sure that I rate the prior forecast, to sort of keep myself honest in terms of what I got right, what I got wrong. Again, we called 2021 pretty well overall. We missed a couple bits, not quite as bullish. Yeah, we were way bullish than most of the market, but not even as quite as bullish as where the market ended up. But, I think, as exciting as 2021 was, 2022 is going to be an even more exciting year. Multiple times I've drawn parallels to, what we saw in China emerging here and what happens in one of these nickel super cycles. And so, again, in China, it was from 2001 to 2007, you made a huge amount of money through that 6-year run. And I think, 2022 is going to be the second year in that run, towards a mid-decade peak in the nickel market. One thing I will caution people, there will be sell-offs during this time frame. So in the 2001 to 2007 period, we had major corrections in 2003 with SARS emerged. And then in 2005, we had your classic economic slowdown, which caused nickel prices collapsed back down from 20,000. They fell down by more than half. 16 months later, they're at $54,000 a ton. So nearly a 5x run. So if you panicked, you lost the last chunk of the leg up. Where you got another 4 or 5x on most equities, even more so 10x. During that last 16-month run. So again, do your work, have conviction in your thesis. And stay the course, and then use those sell-offs as a chance to add to your positions if you think the fundamental story is still there.
Right. So hold your nerve is the message here. If the thematic's right, you pick the right vehicle,
horses,
you'll do well. You'll do well, but hold your nerve. I think this week we're going to spend a bit more time talking about companies, right? And the great and the good. So if you don't mind, your thoughts on some end of play corporate activity, right? We saw a little bit with Noront, Western Areas, and BHP. So why don't we start with Noront? I would say slightly surprised at some of the language being flung around there, but we'll put that to one side. What was your take on that?
Oh, no. Again, the end of the year was this great flurry of activity. And again, underscores the fact, stay the course. If the value is there, it will get surfaced at the right time. Wyloo came over the top of BHP, and not a little bit, but a 40% bump on the 75-cent offer that BHP had on the table, and Wyloo took it at $1.10 a share. That's literally nearly 10x the 12-cent share price that Noront was trading at in March 2020. That's the kind of gain that was there. And literally within, other than the nickel market, nothing else has changed, really in that story, during that time frame. Resource Capital in March 2020 was walking around the street trying to find a buyer for their 29% stake, not getting a lot of takers. Wyloo ended up grabbing it, which is, set the stage for the whole series, of bids that came back. But, literally, that valued Noront at $600 million. From a Canada Nickel perspective, it's great. They literally have, much less than a third of the recoverable nickel that we've got. So, it is a great read-through value, particularly as we're going to have a lot more nickel in our resource by the end of this year. The disappointing part was, Wyloo started to take some shots at Alan Coutts and the team, and just thought that was way out of line. Alan has done a tremendous job. There was a few of us in my past life advancing a nickel project. There were a few of us, who were brave or stupid enough to be advancing nickel projects during a decade where people weren't interested in nickel. It's a hugely challenging community First Nations environment, and Alan did a great job of getting the various communities lined up to back the project, getting the government, behind the project. Again, made a bunch of new discoveries in the region at a point in time where, and again, this is the part that I'm not sure Wyloo understood is, this wasn't like it was a one-off discovery that no one sort of paid much attention to. For a good 2 or 3 year period there, the Ring of Fire got the bulk of exploration expenditures in this country. So, with some pretty sophisticated technology that was available then, the state of the art has moved a little bit. I don't think it's moved that much. So, again, from an Ontario perspective, we're pretty psyched. Would be great to see that region developed. I hope it does. But I'm not sure Wyloo sort of fully understands all the challenges there in front of them.
It's interesting. Not much has changed other than conviction, because there's some big numbers being thrown around there. It's also now a measure. It's another measure by which you can judge, we'll call them peers, other companies, yourself included. And that's always quite useful when you're trying to value companies, where you've got these new measures of value in the marketplace. We'll follow that one. We'll continue to follow that one with great interest. And as you say, Alan, hopefully Wyloo apologise for some of those comments at some point. Western Areas. Yeah,
so this Western Areas has been the rarest of beasts for a very long time. It was a pure play nickel producer. They got going in the early, getting into production in the late 90s, early 2000s, and then have developed a series of mines since that time frame. Because they were standalone pure play, literally they were, for a long period of time there, post 2007, they were really one of the only real pure play nickel stories out there, and as such, always traded at a massive premium to their asset valuation. Because that premium was always there, they never did get taken out. Again, it was kind of it was that plus combination of lack of interest in nickel from the majors that they kind of sat there for quite a period of time. When Nickel Mines, who's got the joint venture with Tsingshan in Indonesia, emerged in the marketplace, you then all of a sudden had another ASX listed pure play nickel producer that had a pretty good growth profile. So Western Areas lost a little bit of its shine in terms of and the premium as being the only player in the market. And they really didn't grow a lot. They basically continued to maintain production within a certain range. But because they didn't have that growth profile, that discount overhang started to show up. So Independence Group, who bought Nova Bollinger back in 2015 to get into the nickel space, who made a tremendously well-timed lithium play a few years ago as they decided to pivot fully into the battery metal sector, took their 9 billion or whatever market cap it was, and finally took Western Areas out. So again, another nickel sulfide, off of the available pool, off the list. And then the last deal of the year, I can remember, end of December or early January, BHP in their first investment in Africa after they sold off South 32, which had the bulk of their African assets, in that, or all of their African assets in that spinout, has taken a stake in Kabanga Nickel, which owns the Kabanga nickel project. This is the world's best nickel deposit. It's better than Voisey's Bay. It was discovered initially in the 1980s by sort of government-funded exploration programs. Was advanced to some extent in the 90s and again in the 2000s.
So what happened?
Simple reason.
What's happened?
Yes, there's a pretty simple reason. If this deposit was in Australia or in Canada, it would have already been mined out. But it's in southwestern Tanzania, up near the border with Rwanda and Burundi, and the Congo not too far away. Tanzania, as even Mark Bristow, who's Captain Africa, found out, the Tanzanian government's pretty challenging to deal with, and has not been the world's most mining-friendly jurisdiction. I'm not sure if it's, where it sits on the Fraser Institute list, or whether even people bother to measure it, because it's been such a challenging jurisdiction. So I was, surprised to see BHP step up. But at the end of the day, the initial $40 million is about 5 minutes of free cash flow for them. So, they're not putting a lot of money on the table yet. But the fact that it's nickel, it's Africa, it's nickel sulfide, and if that's the kind of risks that they're starting to take, again, should underscore to everybody listening that that should underscore the interest in nickel sulfide versus what it's been over the last 30 years.
See, I like Tanzania. We've done business. In fact, I had a military escort straight from my plane to the meeting. through the traffic, literally police outriders or motorcycle outriders kicking cars out of the way from me. I always found them quite nice people to do business with, but it kind of brings you back to how does the company behave? How do big companies behave when they come into these jurisdictions? And what's a fair deal for the country? So. Well, again, the money's gone. We'll see how that plays out, and if that actually gets into production anytime soon.
Yeah, and again, just to underscore, it wasn't like it was some sort of hack junior that had it for a while and really didn't know what to do and how to look at developing the asset and how the government relations. It was owned in a joint venture, 50-50, by Falconbridge and Barrick. Sorry, it was originally Falconbridge and Barrick, and it became 50% Falconbridge Barrick, and it became Glencore and Barrick. So you had Glencore and Barrick own this asset up until about 3 years ago. The government took it back from them for various reasons, and then they handed it to this new Kabanga Nickel Group about 18 months ago. So it's good to see it finally get developed. Again,
is the Kabanga Nickel? Are they a public company?
No, not yet. No,
right.
They're private. Yeah,
but potentially
public. Yeah, I would say, yeah.
So
honestly, Kabanga it's a tremendous deposit. It's great to finally see it hopefully get advanced into production. It still has a ways to go, and Tanzania also has some requirements around refining material in country. Part of the reason they hung stuff up, it was on being able to export material out of the country that's not finished. So. So we'll see how that all unfolds with this project over the next couple of years.
Okay, I'm definitely going to dig into that one. That sounds really fascinating. And then out of the blue, well, I think it's out of the blue to me. It's out of the blue. Yeah. Talon and Tesla. Now, since you mentioned Tesla anywhere, people get really, really excited. So what's happened there?
Yeah, so Talon signed an offtake deal with Tesla. Again, a little surprised that it's at a pre-feasibility sort of. They're in between. They're just past their PFS. No, sorry, but they're in their engineering studies phase. And generally, Tesla, is post feasibility study and beyond. But not surprising to one extent. If you look at the deal that Tesla did in lithium, the big one was Piedmont. At that time when they were negotiating those deals, there was a lot of lithium deposits that you could pick up relatively cheap. We still had not had that major pickup move back in lithium again. But it's very clear that the car companies want as short a supply chain as possible, and preferably in the same jurisdiction. So, the fact that Tesla has locked up the only U.S. nickel producer, or potential nickel producer with Talon, and then they've locked up one of the only North American sources of lithium that could make it into the production windows they're looking at. Again, should really underscore, and we've said it many times, that there's not a lot of new nickel outside of Indonesia. And so anybody who's advancing a project along, that is sitting outside of Indonesia is going to have a lot of interest. So again, this deal with Tesla, I think, is going to be the first, but not the last. And you're going to see a lot of activity from a lot of the car companies over the next 24 months who've got now all these battery plants on the drawing boards to get built over the next 4 or 5 years, and no visibility on all the raw materials they need to fill them.
Well, that's about the slightly terrifies me, but that's maybe a conversation for another day, and maybe some people who know a little bit more about it. Because we seem to be building or talking about this infrastructure and this automotive world where like materials will just suddenly materialize. But right now, the delta between what is known resource and what is needed is just growing to kind of ridiculous levels. But just on the Tesla type deals or the automotive company type deals, right? They're going to be tying people up with options. It's just an option, right? So if you can get into production, if you do it a certain way, and if you do it for a certain price, we will give you a contract. It's an option, right? So are we going to see lots more of these options coming up just to tie people up? And what does it mean for the mining company for the operation? Because obviously, for the cost of money, they can point financiers and say, well, look, we've got this option by XYZ company if we get into production, so therefore fund us. And by the way, we've de-risked it, so we want cheaper finance in place. That's all good, but does it change the underlying need for them to actually go through a regular process to see that they can become an economic mine in the conventional sense? I mean, what does it really change, these options from OEMs?
Yeah, other than sort of blessing the project that, this is a project we like, and if it gets into production, then we will take the product that comes from there. I think you just need to look at the Tesla Piedmont deal. Advancing mines in the United States is not easy. And so, even with Tesla's endorsement, with the big offtake deal from Piedmont, it's stuck with the same state regulatory issues, that the deposit would have. And so there was originally a time window when they were going to get going. I looked at the website the other day, and they've actually not even committed to a specific date now in terms of when they're expecting to get into production, because there's a number of state permits that they have to get. And so, again, a key takeaway with these, and sort of a segue in terms of looking at the some of the themes in terms of, okay, why these deposits that got acquired versus other things that are in the market out there today, and people trying to understand, quote, what it means. So first off, don't just because you get an offtake deal from an Asian partner or a US or European automaker, it does not abrogate any of the local political issues, regulatory issues that you're going to have to go through to get your project advanced. It's still the same project.
Or technical issues. Two, right?
Yeah, or technical issues. Yeah. If you have recovery issues, if you have mining issues, if you have groundwater issues, an offtake deal isn't going to magically make those things, kind of disappear, or all of a sudden be a lot easier to manage.
Because they're kind of subject to, right? The automotive company is saying, subject to you getting this stuff out of the ground, and subject to the economics looking like this, and your green credentials looking like this, and within this time frame, and a specification which is good for us, we will give you a contract. So there's lots of subject to. But what happens in the market, it seems to me, is that all of the above gets wiped out. because they assume Tesla or others have looked at this thing from a technical perspective, and I don't know if they have, or if they've got the capability to do that, because they're not necessarily miners, but they've got to go on a lot on what the company says. But the market just gives them value which perhaps hasn't yet been earned, and then there's going to a lot of backfilling going to happen further down the line if it doesn't kind of happen as planned. That's what worries. That's what worries me.
You've nailed it perfectly. I mean that's 100. That is a real risk. So again, I always when Tesla came out around a few other companies' names, and this our stock had a nice bump at one point. When we had talked about net zero around the same time, Elon Musk was talking about needing clean nickel. And the run up at that point, is again, nothing with the project fundamentally has changed other than at that point in time. So tread carefully. Just this said, and I think the other part, when you look back at those deals that have been done so far recently, what's the common theme there is they look a lot like your typical deposit. If you took Noront's deposit, that's what people have been mining in Sudbury. There should be no metallurgy issues there. It's a very long, narrow deposit. We'll see what the mining costs are, mining in a remote location. But in terms of mining it, milling it, there's really not going to be a lot of risk associated with it. And areas has been going for 15 years, and all these deposits have been well known, for literally for a couple decades, and said for Kabanga, since the 80s and 90s. So again, the majors, you work at a major because it's a big, safe job, and there's not necessarily a lot of risk taking being encouraged. And so when you're looking at a company and you wonder, oh, this is so great, why hasn't somebody bought this yet? It really does take the majors a lot of time for enough people in the company to start to get together to think about that this might be the right idea, and might be the right thing to buy at the time. And until that happens, they won't make a move. What typically happens, we saw in the nickel space, Santa Rita was taken out by Savannah. Sort of the agile mid-tier group, are really the ones who take steps out on assets that might be not look just like every other asset that's been there in the space. Again, Voisey's Bay, another great example in the nickel space. Inco, Teck, Falconbridge could have easily taken that out at a much lower price, but it wasn't until several rounds and several other people all showed interest, and about 100 holes in, then people believed that there was a lot of nickel there. Even though again, there's some pretty spectacular intervals that came out of that. But again, the majors need that amount of time to be able to get their head around stuff. The other examples you look at is in the gold space. A Cisco, two of the bigger deals in the gold space that have been done in North America over the last 10 years were a Cisco getting taken out by Agnico and Yamana for $4 billion, and Detour getting taken out for $5 billion by Kirkland Lake. Again, both of those assets had a few struggles from time to time. We're trading at a fraction of that market cap, and all of the gold majors could have acquired them, at any point in time, for a fraction of what they eventually went for, a few years later. The rock didn't change, the grade didn't change, the mining costs and the milling costs, they didn't have some tremendous breakthrough that they're, mining 50% cheaper than what they were expecting. No, their mining costs were what the mining costs were expected to be. The milling costs ended up being expected what the milling costs were expected to be. And oh shoot, you can produce a huge amount of material at a relatively low cost, because these 1 gram per ton gold deposits were kind of a new, they're too low grade. And all of them ended up paying up big. And again, if you talk to the people at Agnico, I think they're pretty happy that they picked up Malartic when they did. And I think, Kirkland Lake was obviously quite happy to pick up Detour, because Tony McCutcheon and his team did a great job turning that asset around, and getting it to where it needed to be, and taking it beyond. They've actually made some big improvements beyond that. It's been a cash flow machine for them going forward. And so, again, don't always, just because it's a major, don't infer, something bad about the assets the majors haven't looked at yet, and don't infer that, they've figured everything out and all the technical, political issues are suddenly going to disappear for a specific asset.
Yeah, and I think that's true. It, it's kind of interesting. We talked earlier about the criticism thrown at Alan Coutts, etc. But we see that a lot, and you mentioned a couple of names just now as well, where you've got people just flinging in dung from the side, as it were, and go, "Oh, this guy hasn't done it the way that I would have done it, and I think they should have done it." And there's always lots of opinions about the way people need to do things, but it's tough when you get to the kind of the last few yards, the tough yards. You got to make some pretty difficult decisions, and you don't always have everything laid out as nicely as you would on a spreadsheet or a piece of paper. You got to make some tough decisions along the way, I feel. But
and oftentimes again, those challenges come along at just the time in the market where your particular commodity or the broader market is going through a sell-off, which makes it sometimes challenging to get the capital you need at that point in time, which again should create buying opportunities for people, become no-brainer opportunities, for other companies to pick up assets. And again, they still, Agnico Eagle, could have done that deal much sooner. Any of the majors could have done that much sooner. There aren't that many 500,000 ounce gold producers, gold producing mines anywhere in the world, particularly in a very, very, very safe jurisdiction like Quebec, or Northeast Ontario. So
it's interesting because we saw the kind of Great Bear deal done recently. And, that was the right deal for Kinross. It was not the right deal for Barrick. They've got different valuations there. Barrick, you'd have thought, well, that's the obvious buyer. They're next door, easy, all right. Kinross, they're away with over abroad, and they I guess they just needed it and wanted that a little bit more, prepared to pay a little bit more. So yeah, it's funny, some of the decisions at that point. So your thoughts on? So I'm just sort of intrigued on your any final thoughts on the Western Australia's bit, because we didn't really talk about what does it mean for us as investors
in terms of the Western
Australian, it's a Western areas deal, I should say.
Yeah, no, I think again that one as nickel mines became another pure play nickel story, they sort of fell out of favor. The other part of it was, and now that it's moving on into new hands, Western areas had this term which used to drive me crazy. They had these cash costs to concentrate.
What's that mean?
Which is a term.
What's that mean?
Yeah, which is basically, yes, if there was a smelter that they also owned right next door, then perhaps that might be a number that mattered. But at the time, they were only getting paid perhaps 70% of the nickel value in the concentrate because of the smelting oligopoly that was there. So if you took away 30% of the nickel, and again, you can't magically transport the concentrate from your mine site to where the smelter is, so there's some costs associated with that. But again, it was and what was shocking was you would see this, they would quote this cash cost, and then you look at the cash flow statement and you can't see any free cash flow, even though today's nickel price is a lot higher than that cash cost. And so again, just when you're looking at companies, just be careful with the way they might spin the numbers. And again, I would, particularly for producing assets, always take a look at the cash flow statement. From an accounting perspective, that is the one statement that's pretty hard to fake. Something needs to go in a line, and it ties to a real number at the top and it ties to a real number at the bottom. And so, looking at those statements to really see how much free cash flow a producing asset is generating is something I would encourage everybody to look at if you've got a producing asset to really see how much cash is coming out. Because again, one of the challenges with these higher grade nickel deposits is you might have a robust cash cost number, but a big portion of that cash flow has to go back in and explore and develop the next ore body underground. And so, in mining, I would again encourage everybody to really look at
Totally. And it's something we talk about. So I like your reference to the smelter cabal, because they take their pound of flesh too. But in fact, I think there's a course, one of the courses, and we kind of go through a spreadsheet exercise, and I think we got a lot of feedback. Well, why are you discounting the cash components so heavily? It's like, well, because you're not really in control of the all of the costs once you've dug it out of the ground. Well, unless you do control all of the moving parts, but most people don't. They have to go and get it processed somewhere, and people are going to take little pieces off the table the whole way down the line. And yeah, it's get stuck into the numbers, guys. That's the whole point. And then to your last point is, my biggest bugbear is companies that say, oh, we're producing free cash flow. And you go, what's your definition of free cash flow? Because you seem to be needing to plow most of it back into the ground. So it's not necessarily what I would call free cash flow.
No.
Right? So it's like, oh, we've got 10 drills turning. We need to, we're doing an exploration of a district-wide property. And like, well, okay. So all of the money that you produce from all of the gold or whatever that you've produced is going back in the ground. Why is that good for shareholders? At what point does it become good for shareholders? Because you could spend the next 10 years trying to create value. And that's what I call the hamster wheel effect. And there's quite a few hamster wheel companies out there.
Yeah, no, mining, when you can find a mining operation that generates, there are very few free cash flow machine mines in this space. When you can find them, hang on to them, because they are a very, very scarce commodity in this business. Unfortunately, because there's a lot of, I like that term, hamster wheels. So
it's true. It's running fast to stand still. I guess there's lots of ways that you can do it. You can describe it. But right on to the thing. I do kind of want to finish off with some other company news, because I think there's a few little stories I want to get into. But just more broadly with regards to, I don't know if this would be the time to. You mentioned Indonesia earlier there. So is it worth talking about what's going on?
First off. Aston Minerals, it's an ASX company. They've reported their some results from a project just south of us in Timmins. We see it as fantastic news, because it really does confirm our belief that the Timmins district, of which we've got 13 targets, they have pulled out some pretty good intervals that look a lot like ours, but with some even higher grade intervals at 0.5 to 0.6% nickel. So kudos to Dale's team for continuing to drill that. And again, I think the market really doesn't realize that these are very early days in what we think is going to be one of the world's largest nickel sulfide camps by the time we're done. The other big news is December. I've talked about Poseidon a few times, but they literally pulled out, a bunch of some of the best drill intersections that were done. Again, just to help put into context, when you see 2 or 3 meters at 4 to 5% nickel, yeah, that's good, and that's some smoke. That might point to some fire. But if you want to see what very big fire looks like, it's, they had holes with 13 meters at 10% nickel, 11 meters at 13% nickel, 3.5 meters at 16% nickel, 15 meters at almost 18% nickel. That Silver Swan deposit is truly and Black Swan deposit is truly a unique beast. So again, it's kudos to Peter Harold's team at Poseidon for continuing to unlock that high grade resource that's there, and they're planning to restart and be back in production by early 2023. And again, they've got some big shareholders in the name, in the form of Andrew Forrest and Black Mountain Metals, the U.S. private equity firm that took a stake in that back before nickel became back into favor. FPX, who's advancing a large-scale aurorite deposit in BC. They've stepped out to a new target. Their original project was Baptiste. Again, they've got good intervals, and what they're measuring is magnetic nickel grades, because that's what they recover. Again, some very good long intervals with some very good grades. So again, it's good to see, because again, these large ultramafics, again, we fundamentally believe are going to be the big new source of nickel for the next decades. Ardia, which had a laterite project, it was spun out of another junior about 10 years ago with the nickel laterite in it. They've got some decent nickel sulfide hits in the Kalgoorlie area. So again, not huge intervals at this point, but 2.7 meters at 5% nickel, including a meter or so at 8%. So that's a good interval. A good interval does not make a mind, but the fact that they're getting some decent grades there is pretty interesting. And I would keep an eye on it to see if they're able to to extend that resource around from what they've got at this point.
Magna,
and then
Magna. There's another one.
Magna in just north of Sudbury. Again, this is never going to be a huge deposit, but is one that could potentially get back into cash flow sooner than later. It's a open pit operation that's able to ship ore to Sudbury, and they've got a permit for a mill locally as well, and they've continued to sort of fill in a resource. There was a gap in the resource that's there, and their belief was it was continuous, and it looks like they're getting some good intervals of nickel, copper, cobalt with PGMs, and continuing to fill that in and extend some of the existing resource. So again, with nickel prices at $10 a pound, I wouldn't be surprised to see announcements around this deposit coming back into the marketplace sometime by the end of this year, early next. Again, both Glencore and Vale in Sudbury are keen to get feed, so they'll hopefully get paid a decent price in terms of shipping ore to one of those local smelters.
Right, brilliant. Well, there you go. There's a few names for people to think about as part of the mix. We should probably do a little bit of market stuff, shouldn't we? Is that worth getting on?
I think so. Yeah. Nickel prices, as I said in the forecast session earlier this week, I'm glad we did it in January rather than December, because I would have said, I think that we will get to $10 a pound this year, but it will take 2 or 3 whacks to get through, because $10 has been a pretty important support resistance level for quite a while. But it blew through it in the first 2 weeks of the year, and we've continued to trade above it at $10, 25 cents, $10.30 a pound, between $22,500 and $23,000 on a per ton basis. What's allowed that to happen is a couple things. One, we've continued to see declines in LME inventories. Again, those can be manipulated from time to time, but when you see pretty steady withdrawals coming down, to me, exchange inventories are a little bit like cash flow statements from an accounting perspective. Lots of people can have forecasts around what this current supply demand balance is, but as long as there's no market manipulation going on, those exchange inventories do reflect what the state of the current supply demand balances. And so those are down on a weeks of inventory basis to among the lowest levels that we've seen in the nickel market. On a unit basis, they're still much higher, but again, the nickel market's more than doubled since we were back at these inventory levels back in 2006 and 7. The pieces, we're seeing a backwardation in the LME prices, and so again, that means today's price is higher than the 3-month price, which implies that there's some tightness in terms of being able to get the LME inventory that's actually available. And so again, people look at that as a view that, okay, supplies are pretty tight. And, from my perspective, heading into Chinese New Year, generally, again, China's, starting to wind things down in another week and a half or so, everything's going to shut down for 10 days. And so if you're comfortable that your inventories are there, you can get the supply you want at the price you want, then you're not going to bother restocking before Chinese New Year. If you're a little nervous that the price that you're going to pay at the amount of material that's available, or maybe I'm going to have extra demands come in from my customer that I want to be ready for, then you restock before Chinese New Year. So it's a bullish sign that a lot of companies are choosing to add a little inventory heading into Chinese New Year. The announcement from Indonesia that they're looking at putting export taxes or restricting NPI flows from Indonesia, during the next year or two, again, is also getting people to have a little more than a little less inventory. And so I would say it's a good bullish sign. We've seen that reflected in today's metal prices. I would say see what happens post Chinese New Year. And if you see additional restocking on top of that coming out of Chinese New Year, then I think the coming year is going to be very, very exciting from an overall story perspective, because it means we're starting the year with a big bang. And again, I think across the base metal complex, and not just nickel, I think it's going to be a pretty interesting year.
Stay the course. I'll say it again. Stay the course. But so one thing I'd say was just noodling in the back of my mind while you were talking was, do you think with the Tesla Talon deal, it kind of puts that LFP new battery technology component to bed? Because there was a few comments last year about, we're nickel's being designed out of batteries. Nickel's not needed as much now. I mean, how do you look at the Tesla Talon tie up?
Yeah, so I think we've seen some comments recently on percent in terms of people looking at battery materials for the first time. Again, if you're new to the story, I would always encourage you to look at the Tesla Battery Day presentation from September 2021. They do a great job of outlining the different components in the battery and why certain things are needed. Nickel fundamentally has the highest energy density per kilowatt hour of the materials that are used in an NMC battery. And so that's why we've moved very aggressively towards these high nickel batteries. And we will always need high nickel batteries for high energy, so things like all these big pickup trucks, that are going to get built in the United States, those are all going to be high nickel. Things like that need long range, and people are building big semi trucks. Those again, I think are going to be a lot of high nickel batteries. We will need, I've always said the market's going to break into three buckets. LFP is going to be the middle, the low end bucket, where your range doesn't really matter. The middle bucket will be LFP or a range of other technologies that might emerge that use some other sort of variations in terms of the cathode material that are there. But that high end is always going to be nickel, and just the demand from that high end sector is going to exceed whatever nickel can be produced. New technologies, we will see there's a huge amount of research that's getting done in the space. So you will see some new battery technologies emerge. But just remember, you carry around a battery in your hand. Billions of people do that. There's people in cars have their family sitting on top of a battery. And so, any new battery technology is going to have to go through, a massive, rigorous amount of testing, to be able to, before people are going to start to adopt new technology. So, I would say for the rest of this decade and into the mid 2030s, you're going to see, NMC type batteries being continue to be, and LFP batteries to be the dominant, and variations on lithium batteries be the dominant technology. And yeah, by the later part of the 2030s, you should see some new technologies emerging. And again, that's not just in my view, but a lot smarter people who spend a lot more time in the battery sector, that's the way it's going to be. So I assume for now that these platforms will be the ones that get used, and you don't have to worry about sort of getting substituted out of the market in 4 years.
Well, just again, for the newbies, it kind of is irrelevant in the sense that the car battery side of things is less than 10% of the actual driver for nickel demand.
Oh, and that's, again, in terms of if you are hesitant about battery technology, in terms of playing the battery material space, the one big advantage nickel has is we have this year demand from the rest of the sectors is 90% of it is non-battery. By the end of the decade, it's expected to be 1/3 batteries. That's not the case with lithium, graphite, cobalt. Those are materials that are almost 100% dependent on growth in the EV market over the coming decade. And so if a new technology did emerge, they're going to get a big kick in the teeth because they don't have other applications that can help support demand growth going forward.
Yeah, and let's be clear, today's 90% and tomorrow's 60% is the same number of tons. So probably just with zero growth. It just means that there's going to be more demand coming from the OEM sector. But in terms of demand is not going to fall away if the battery space doesn't happen. Brilliant. Mark, I think, wow, that's a fulsome session. Kick the year off strong and hard.
There we go.
Stay the course, guys. Pick the right companies. As Mark always says, we need all of the above. So if you can get into production, you'll do well. And a few neat names for people to look at. And you're going to come on probably Monday or so and talk about your company, Canada Nickel.
Yep. Give you an update.
Big year.
Again, it's going to be exciting year for the nickel market. It's going to be a very exciting year for Canada Nickel. So
yeah,
it'll be, I have to give an update.
You got some big deliverables. I can't wait.
Oh yeah, no, and yeah, it'll be a good year.
Good. Okay, we'll see you then.